This is section 6 of unit 3. This section is on your credit card statement. The quote here is, "Credit cards are like snakes. Handle them long enough and one will bite you." And this is a quote by Elizabeth Warren, Senator from Massachusetts. The objectives of this lesson are to identify and use the various entries in a credit card statement. We have a number of key terms or vocabulary to become familiar with in this section. Let's go through them one by one. First is the billing cycle. This is the predetermined amount of time set by the credit card company that is used for calculating your credit card bill. It's usually a month. The payment due date. This is the date the monthly payment must be received by the creditor. Transactions. These are lists where purchases were made and the date. Debit or credit. Debit is the amount charged to your account, and credit is a payment made to reduce your debt. Previous balance. Any amount owed before the current billing period. In other words, a balance left over from the previous month, for example. New purchases. The sum of purchases or debits on the current bill. Late charge. This is the penalty for late payments from a previous month, okay? If you miss the due date, you get a late charge or a penalty. Finance charge, the cost of using the credit card for the current billing period if not paid off in full, okay? When you first get a credit card, if you pay off all the amount that you charged in that first month, you don't get charged a finance charge or an interest rate. But if you don't pay the full amount off, then they do charge you a finance charge or interest. New balance, the amount you currently owe. And then lastly, minimum payment. This amount is the lowest payment the credit card company will accept for the current billing period. You have to pay, if you have a balance, you have to pay a certain amount, and you calculate that as the minimum payment. So what information does a credit card statement give you? Here's an example of one shown right here. And you can see a number of things on it. Obviously, there's the person's name, their address, then there's account information, the account number, the billing date, okay? The payment due date, a list of all the transactions that were made during that payment. This is both purchases as well as payments. And debits or credits, okay? Credits will be marked with a minus sign. This is where you make a payment, okay? And the rest will be considered debits or purchases. Then at the bottom here, there's a summary. Whatever your previous balance was, payments or credits that you made. In this case, you made one payment. New purchases, a late charge, if any, a finance charge, if any, the new balance, and the minimum payment that is due on the payment due date up here, February 2nd. Then you have an average daily balance calculated, the number of days in the billing cycle. As I say, usually it's a month, in this case 30. The APR, in this case, is 18%. And then the monthly periodic rate, you just take the APR and divide it by 12. And in this case, we came out with 1.5%. So, and also here you can see the total credit line at $8,000 and the total available credit, $7,636.52. So let's look at an example here. We've got a summary statement from the previous credit card statement on the previous slide. And the summary portion of Jane's credit card statement shown is above. A, explain how the new purchases amount was determined, and B, explain how the new balance amount was determined. Now, if you remember from the full credit card statement, there were a number of purchases that were made. So basically, to answer this part A, we take and we add up all the new purchases. And there were four things that Jane Sharp charged to her credit card. So we add all those up, and we come out with $284.45. And that, as you can see, that's the new purchases right here. So now let's look how the new balance amount was determined. So we're looking for the new balance amount. All right, and that's, let's see, where is that shown? Right here. The new balance is shown right here. Okay, how did they come up with that $363.48? Well, basically they took the previous balance, which is this amount here, minus the payments and credits, okay, payment she made, plus the new purchases, plus any late charge, plus any finance charge, and that will give us the new balance, okay? So if we look at these numbers, we get $150.50 minus $75, which she made a payment, plus $284.45, which was her new purchases. She didn't have any late charge, but she did have a finance charge of $353, and that gave her a total of $363.48, which you can see right here. All right, let's look at example 2. Pasquale has a credit line of $15,000 on his credit card. His summary looks as follows. How much available credit does he have? All right, so let's see how we can figure that. Well, the first thing we have to do is identify his new balance, okay? So we're going to take his previous balance, which is $4,598.12, subtract his payments or credits of $4,000, add his new purchases, which is $1,368.55, add a late charge, which he had of $20, and add a finance charge of $5.78, and this would be his new balance. His new balance is now $1,992.45. Now we have to subtract the new balance from the credit limit, okay? Because remember, we're trying to find his available credit, all right? So his credit limit is $15,000. And we calculated his new balance as $1,992.45. We subtract those two, and we come out with his available credit, $13,007.55 for available credit. All right, now let's look at example 3. Berna is examining the summary section of her credit card statement. She has checked all the entries on her bill and agrees with everything except the new balance. Determine where the error was made. All right, so let's calculate the new balance, all right? So we're going to take her previous balance, $1,748, subtract $100, which was a payment she made, add $800, which was her new purchases, add a $9.15 late charge and a $19 finance charge, and we come out with $2,476.15. Well, what is the new balance on our statement? On our statement, it's $2,576. There's a difference of $100. So it would appear that they did not take into account this payment of $100, okay? So that appears to be where the error is.